Trump's tariff tensions. Will Canada pivot away from the U.S. for decades? Trade between Canada and the United States was the gold standard of relationship marked by trust, convenience, and economic cooperation. From auto parts to aluminum, from forestry products to dairy, goods flowed effortlessly across the border every day. The bond between these two neighboring nations was so strong that it was often seen as unshakable. But under President Donald Trump's leadership, that long-standing partnership has been tested. His unpredictable tariffs are causing deep unease in Canada, leaving the country to reconsider its economic future. Why is this happening now? Why are tensions between Canada and the U.S. escalating so quickly? Trump's tariff rhetoric is part of a broader strategy that threatens to impose heavy tariffs on vital sectors such as oil, steel, aluminum, and agriculture. While the U.S. president has threatened these moves several times, he has already acted on many of his promises, introducing tariffs that have complicated trade between the two countries. Trump reaffirmed his position yesterday, stating that he's still committed to placing tariffs on Canada, with plans to implement them as soon as tomorrow. On the other hand, Canada is pushing back against these threats. The country, which exports up to 4 million barrels of crude oil per day to the U.S. and is its largest supplier of oil, refuses to bow to Trump's economic pressure as tensions rise. Canada finds itself at a crossroads. Will it continue to rely on the U.S., or will it begin to pivot toward new partners, such as China or the European Union? The idea that Canada could turn to China is not as far-fetched as it may seem. In recent months, Canada has made significant moves toward diversifying its oil exports. With the expansion of the Trans Mountain Pipeline, Canadian crude oil can now be shipped via tankers across the Pacific Ocean to China and other Asian markets. Not long ago, the notion of sending oil to Asia seemed impractical. After all, the U.S. has been Canada's most convenient and lucrative trading partner for decades. But today, the tide is shifting. A recent report from the China Institute revealed that half of all oil exports through Vancouver now go directly to China. This development raises a critical question. Is Canada willing to risk its long-standing economic relationship with the U.S. for a new market in Asia in response to Trump's tariff threats? Canada is increasingly open to exploring its options. In fact, Ottawa has warned that if the U.S. imposes tariffs, Canada is ready to pursue new oil deals with China. The ramifications of such a move would not only affect Canada, but also the United States. Trump's tariffs on Canadian oil could lead to increased prices for U.S. refineries, making Canadian crude oil less competitive. In contrast, China could purchase oil from Canada at a more attractive price, refining it in its own refineries and placing it on the global market. This could undermine U.S. refineries and further erode the long-standing trade relationship between the two countries. The Trans Mountain Pipeline and the growing trade between Canada and China highlight the changing dynamics of global trade. When one side closes doors or raises prices, the other side looks for new options. Canada's relationship with China could be seen as a modern take on what was once called the third option, an attempt to break free from the U.S.'s economic dominance and explore new strategic partnerships. 50 years ago, Canada had a similar debate over its dependency on the U.S., and now, under pressure from Trump's tariff policies, the conversation is being revived. At this point, Canada finds itself in a delicate position. The European Union, with its zero-tariff trade agreement with Canada, is also a potential trading partner. The geographical distance between Canada and Europe is a clear challenge, but Canada is determined to find ways to overcome it with strategic investments in energy infrastructure, such as potential new pipelines. Canada could expand its export options to Europe and Asia, reducing its dependence on the U.S. In fact, Canada's oil exports are deeply tied to the U.S., which imports about half of its crude oil from Canada. Most of this oil is heavy crude, which is vital for U.S. refineries. If Trump's tariffs make Canadian oil more expensive, U.S. refineries could face higher costs, making them less competitive on the global stage. In response, Canada could look to China as a primary buyer, securing a foothold in a market that is eager for oil supplies. If Canadian oil were to be purchased by China at a lower price than the U.S. is willing to pay, it would disrupt the balance of trade that has existed for decades. The possibility of a Canadian pivot away from the U.S. is not just a theoretical scenario, it's becoming an increasingly realistic option. The idea of turning to China or Europe as alternative markets for oil is a serious consideration in Ottawa. If the U.S. continues to impose tariffs, Canada could use this opportunity to solidify new oil deals, diversifying its trade relationships and reducing its dependence on its southern neighbor. Such a move could have significant global ramifications, potentially altering the dynamics of the oil market and challenging the U.S.'s position as the world's dominant economic power. But while the prospect of a Canadian pivot is compelling, it's not without its challenges. Global oil markets remain volatile, and Canada's economy is not immune to the risks posed by Trump's tariffs. Additionally, environmental concerns, resistance from indigenous communities, and conflicts between provincial and federal governments complicate the situation. Still, the prospect of more access to Asia and the growing importance of the Trans Mountain Pipeline suggests that Canada is serious about finding alternative avenues for its oil exports. These moves are not without political implications. In Canada, many are viewing Trump's tariff threats as not just an economic issue, but as an affront to 40 years of neighborly relations between the two countries. Some have even protested Trump's actions by bowing the U.S. national anthem at sporting events, a clear sign of the growing frustration with the current state of affairs. Canada's response to Trump's tariffs could be transformative. In addition to the Trans Mountain Pipeline, other pipeline projects like Energy East and Northern Gateway are being discussed as potential solutions to secure more access to Asia. While these plans face significant challenges, including environmental, opposition, and logistical issues, they remain on the table as part of Canada's broader strategy to reduce its reliance on the U.S. Despite the potential for deeper engagement with China and Europe, the United States still holds a geographic and logistical advantage. It remains the most profitable market for much of Canada's oil, and any shift away from the U.S. would come at a cost. However, as Canada's trade options expand, the U.S.'s bargaining power weakens, leaving Trump with a difficult decision. Will the U.S. continue its tariff strategy, or will it find a way to negotiate a more favorable deal with its neighbor to the north? The uncertainty surrounding Trump's tariffs has already begun to affect both countries' economies. While the president has temporarily suspended the tariffs, he has made it clear that they could return at any time. This uncertainty is prompting Canada to prepare for all scenarios, including the possibility of a deal with China. If such a deal were to materialize, it could signal the beginning of a new chapter in Canada's economic future, one that could reduce its dependence on the U.S. and secure its position as a key player in the global oil market. But what will this mean for the United States? Will the U.S. be willing to lose Canada as a major trading partner, or will it back down in the face of mounting pressure from its neighbor? The possibility of a trade war between the two countries raises important questions about the future of their relationship. As Canada looks to diversify its trade relationships, it faces significant challenges. Can it successfully export large quantities of oil to China or Europe? Will geographical and political realities prevent it from doing so? And what are the broader consequences of Trump's tariffs on the global economy? These are questions that remain unanswered. But one thing is clear: the growing tensions between Canada and the U.S. could have far-reaching implications for both countries and the global market. Ultimately, this trade dispute could be a pivotal moment in the history of Canada-U.S. relations. Whether the two nations find a way to negotiate a peaceful resolution, or whether the tariffs escalate into a full-blown trade war, remains to be seen. What is certain, however, is that the future of this economic relationship is now in question, and Canada is preparing to explore all of its options, whether with China, Europe, or other global partners should the need arise.